Hello, chart watchers, and welcome to this Monday, June 17th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on in the market. You can see here that we do have the Dow Jones Industrial Average currently up 57 points. The S&P 500 up 6, the NASDAQ up 52, the Russell 2000 up 10. 10-year Treasury yield down a basis point today, 2.08%. Volatility index remains in sideways consolidation formation at this point. Communication services leading to the upside today, along with real estate. Utilities struggling to break through the high that was established about, almost 2 weeks ago. Consumer staples, though, reversing a little bit off of its recent uptrend. It's had a strong month in June. It is possibly reversing here, maybe getting a little bit of profit taking. Internet stocks, the big reason that communication services is higher. You can see the group up not too far from 2%. It is above that 20-day moving average, so we're starting to see some strengthening in the internet group. Biotech's having a really strong day in the healthcare area, and we want to watch that 1950 level. We know that biotechs love the summertime, so if we get a technical breakout, it is certainly worth keeping an eye on. Medical supplies, however, holding back healthcare overall. We've got medical supplies moving lower today by about 1.5%. Big news in the internet space was Facebook. Facebook came out, said that they were looking into a platform cryptocurrency, and they were going to have a white paper out tomorrow, and that is giving Bitcoin a lift. It's not so much that they're backing Bitcoin, but I think it's just the fact that there's a legitimization. Is that a word? Legitimize? But anyway, great. The Bitcoin, I think, on this news, certainly benefiting up more than 10% today, trying to break out to its high in 2019. Okay, Erin, another weekend in the books. I do want to say a happy belated Father's Day to all the fathers out there that are listening in this morning. But did you have a good weekend with your dad?
Absolutely. Well, my husband actually left yesterday to go fishing for the next 3 days. That was his little Father's Day present. But that did afford me the opportunity to go visit my dad on my own. So that was very nice to sit there and try not to talk too much about stocks while my mom was there.
I know you talked stocks. There's no way you didn't talk stocks.
It's very hard because her eyes start to glaze over and she starts to get a little annoyed.
Well, I've only talked to your dad a few times, but every time it's been about stocks. So I can only imagine that you all are talking stocks.
We try not to talk too much shop.
There you go. Well, it was a good weekend here in South Carolina. I tell you, we had really nice weather. It got a little hot, a little humid toward the end of the weekend, but we had about a 3 or 4 day stretch. Really nice, beautiful evenings. Had my kids were in town, so I was able to spend Father's Day with my kids. Had a great day, great weekend. So ready to do it. The market off to a good start.
All right. Yeah, we'll get this week kicked off. It's going to be a good one, I'm sure. Well, we have a lot of guests this week, so it's definitely going to be a good week. Danielle Shea will be in with us tomorrow. She is our options guru. Greg Harmon is going to be in on Wednesday as a guest. Mr. RRG, Julius DeKempener, will be here on Thursday. Next week, we will be doing a roundtable on pop culture stocks with Mary Ellen. She'll be coming in for that. And Brian Shannon will be in on Wednesday of next week. Today's schedule, jam-packed as always for Mondays. We will do Monday setups after news and headlines. Earnings Spotlight follows that. John Hopkins will be in with us today to do that. 10 and 10, Micron will be our first symbol. And then I will finish off the program with the sentiment update. Let's go ahead and get started. Technical news and headlines.
All right. Well, we did have a couple of economic reports out earlier today. You can see the June Empire State Manufacturing Survey came in much weaker than expected, minus 8.6%. Market expecting a positive 10.0 reading. June Housing Market Index, the NAHB, came in 64 versus 67. So weaker than expected economic reports. And of course, tomorrow we start a Fed meeting. This is going to be an interesting one. I don't think they're going to cut rates at this one, but there are some that are beginning to speculate that they might. And the 10-year Treasury yield at this point just says that we're probably going to be getting a rate cut at some point. I think the way that the bond market has been acting with so much money pouring into bonds, I think we're definitely looking at a rate cut at some point. I would argue that it's more likely at the July meeting than June. But like I said, there are some who are coming out saying that the Fed can really jump in front of this and cut this week. We'll see. But you can see from the 10-year Treasury yield down at 2.08%. We are down a basis point today. And there is that low still sticking out there like a sore thumb back in early September 2017. So far holding up above that. I'll be interested to see how the 10-year stacks up later in the week after we get the latest announcement from the Fed. Earnings reports, there really was very little in the way of earnings, nothing in terms of larger companies. So we're going to skip right through that. Let's take a look at Facebook, because Facebook, as I mentioned, outlined its plans for a platform cryptocurrency, and they will be issuing a white paper tomorrow. Market's certainly interested in that. And look at the volume already coming in today on Facebook, 14 million shares, up more than $5, trading at its highest level since back in mid-May, so probably about a 5-week high at this point. I thought it was really important for Facebook to get back through that 20-day moving average. It did that on Friday, and it is continuing that move on some very heavy volume. When we look at the relative chart on Facebook, and I mentioned this last week as well, we had broken out to about a 10, 11-month relative high versus the internet space. And this is what you want to see, in my opinion, when you get into a stock. You want to know that it is one of the leaders in its space, and I think Facebook is clearly demonstrating that and just simply adding to the relative strength that it was already enjoying. So Facebook looks pretty good to me technically. I'd be surprised if we don't at least make a run back up to about that 197, 198 level to test that gap up in late April. So we'll see whether or not we can get through, but I think in time we're going to make a push up into that area. Let's pull up the Bitcoin here. We don't talk about this a lot, but we did have a panel discussion between Dave Keller and Erin Swinlin between comparing, contrasting Bitcoin with gold and so forth. But you can see after pulling back, we held that prior low, held gap support, and now with the gap higher today and on heavy volume, trying to break out to a new high for 2019. So this is pretty big deal. Now, on a grander scheme of things, obviously this is this cryptocurrency had gone down for, I don't know, maybe 14, 15 months after a huge spike in 2017. Now it seems to be trending higher again. So for those of you who like to follow these trends and like momentum investing, I think right now Bitcoin certainly has the momentum behind it to the upside. Another stock that was getting hit earlier today, I mentioned medical supplies were having a rough day today. One of the reasons was Align Technologies. They ceased their Strawman distribution deal, which, among other things, would have settled some outstanding lawsuits. But instead, they decided to just get out of that deal. And you can see the market not liking it. Big volume today, stock down more than 6%, almost 7%. And this is kind of masking some other strength within the medical supplies area. Tilray, after having a pretty good week or gap up recently, we pulled back into gap support, as you can see right here. And now turning back up, we are up about 4 1/3% on Tilray today as we try to get back up above that 20-day moving average. I think that's really important because this is a stock that traded below it. We gapped up above on June 10th, above that 20-day moving average, and closed above it for the first time in probably the last, 3.5 months, and then quickly went right back below the 20-day. We traded above it today. If I wasn't in it at this point, I'd like to see that move back up above the 20-day and then probably use this gap support as a stop area. But this is a stock that if it can get back up above the 20-day, we know what the history is of Tilray. Just last year, huge move after it went public in July. Stock ran from below 20 all the way up to 300 in 2 months before going into this push to the downside. So if, in fact, we are bottoming and beginning to see a move to the upside, it's going to be hard to see it on this weekly chart, but on a daily chart, you will see it in the form of a move back through that 20-day. You can't get into an uptrend on the weekly chart before you get into an uptrend on the daily chart. So that's what I would be looking for initially is whether or not we can get back up above that 20-day moving average. A couple of areas of the market that I wanted to mention, and I'm going to go into the relative strength of industries, because there are a couple that are starting to, maybe I think are worth taking a look at. The first one is in the consumer discretionary area. I wanted to take a look at broadline retailers. And you can see with their relative strength, they're breaking out above that April relative high. And I still see a beautiful uptrend here, PPO above the center line. So I think this is a group, broadline retail, starting to really pick up again in terms of its relative momentum. And that could lead to some nice trades in that area. An area not looking so good, though, is footwear. And this is one that I've written about and talked about. I just think it's teetering right now. It had been a big outperformer for about 18 months. You can see October 2017 up to almost March of 2019. This isn't the performance of footwear. This down here is the performance of footwear, where we ran from 950 to 16. Well, actually in February, got up probably to about 16 and a quarter. So we're talking about, 70% advance in the entire group over about 16, 17 months. That's what led to relative outperformance, which is reflected here. Now we've been downtrending relative to the S&P 500, this group has, and you can see that we're breaking into negative territory on that relative PPO. And today it is one of the worst performers in consumer discretionary, starting to roll back over again below the 50-day. I'd be very concerned if the low we saw in May, that relative low right there, if that was violated, that would not make me feel very good about this space. So footwear has been a leader. It's teetering right now. Watch this relative strength line here. And then I wanted to bring up one other, which was the transportation services group. And this is in the industrials. And here we go. And the reason I wanted to bring this up, this is a group, I'm going to go back a little bit further. Let's go back, maybe throughout this bull market. When you're looking at transportation services, when the market is strong, or when this group is strong, you can see 2016 through 2017 into early 2018. Not only was the group rising rapidly, but it was outperforming the S&P. Same thing 2012 into 2015. This huge uptrend, for the most part, was outperforming the S&P 500. But right now, the group looks like it's putting in, some higher lows, looks pretty good, but it's actually putting in lower relative lows. So I think you want to still be careful with this transportation services group. I do not think that the market is endorsing this group yet, and so I would stay away. Okay, it's time for the scooter mover of the day. And so today's stock, I want to bring up TSCO, which is Tractor Supply. And the reason I want to bring this stock up, it's showing as a down mover in the scooter numbers. I wanted to see if we could pick this one up here. Hold on one second. Let me get the mid cap. And I like to keep them all up. So basically what I do is I go through this listing here and look at these top downs and top ups in each of these groups. And then I just look for stocks that are making moves in one direction or the other. Now, I know earlier Tractor Supply, it has bounced off that earlier low. And so I think that's probably why we're not seeing it on that list now. But the reason I was bringing it up, it's not just the fact that the scooter is going up or down, but I think right here, this is a key breakout of this double top. And so, yes, it's showing up as a scooter mover to the downside. But if we reverse later today and can print a hammer at about that 20-day moving average or above, I think that would be very significant, because when we take a look at the relative strength of this company, Tractor Supply, it's in the specialty retail group, which has been a pretty good area. And I think when you look at these relative charts, I think for the most part, we have a pretty good stock in a pretty good area of the market. So a big reversal there, even though it's a down mover in the scooter, I think could be an opportunity. So that is my scooter mover of the day.
All righty. Well, let's get started with some upgrades and downgrades. All right. Got to get my ACP ready here for everybody. So give me just a moment. There we are. All right, so we're going to start off with Deere Company. This one was upgraded today by, where I have it, there it is, Robert Baird, but moved it from a neutral to an outperform. They have raised their target from 129. Let's go ahead and get our... So they have raised it from 129. You can see right about here, which matches up pretty much with that low that we can see over here. So let's go ahead and put a little circle here. So we've got the, move that over. So we have the lows here. That's where they had their price target. So now let's look at what we've got on the support and resistance. So I'm going to move to a horizontal line here. So here we can see this was a shorter term top back here. Haven't quite gotten there. We've closed the gap today. You can see a gap right in here. And we've moved up above that, but where would be overhead resistance? Well, I think that has some, could have some possibilities, but more likely we need to look at these lows that we saw back here, and notice we're already sitting on a move right up there against that resistance line. But like I said, they did move their target up to 175. So I'm going to just drag that down just a little bit, and that's about 175 right there. So they're definitely looking for a move past the high that we saw back there in April. All right, next one up is Mosaic. Mosaic was upgraded by B of A Merrill today from a neutral to a buy. They have moved their target up to 30. So mark that there. They moved it, yes, to 30. They didn't give us a downside target. So I'm looking right here at what is overhead resistance in the intermediate term. But right here, we've got this V bottom. I would look in the short term. Well, certainly you've got some overhead resistance that just got taken out right there. Let's make this a little bit bigger here. See how this shapes up. So yes, there you go. So we've got resistance at these lows back here. Where was our support before? Was way down here, but we managed to get some right at there at about 2182. Look at how that matches up with that consolidation zone back there. All right, next one up is Snap, and this one was upgraded from a hold to a buy, and the upside target right now is $17. So they're looking for a move from about 14 here to 17, but currently we've got to deal with this overhead resistance in the shorter term back here from that April or June 15th, let's see, 2018. That was when our previous high was. I'm looking here, and I'm going to go ahead and draw this in, but I'm seeing a possible flag here, right in there. Let's get that in here. There we go. And, you know, flag formations are bullish. It would tell you that if we do get that breakout above that overhead resistance, that we could expect to move about the size of this pattern, which is about a $5 move, because you can see $10 lining up there at the bottom. And right up here, we're looking at 14. So, okay, maybe a $14, $4 move from here would put us right about 18. So as far as the technical analysis goes, I didn't make that. We're looking at 18 as an upside target, not necessarily just 17. All right, move to some downgrades real quick here. We have Amphenol was upgraded today. Let's zoom in a little bit more on what we have going. So I'm going to go ahead, and I need to change the color. I like blue or purple. You could make a case that we did have a possible flag that had lined up here, but clearly we're getting the breakdown. The resistance level and support, well, I would go back here for some support. It matches up with the low we got back here with the top that we got back here in November. You know, it looks like we're heading back to test that area of support. And I'm not so certain now that we're looking at a flag formation, just because of the way that continued to break down. We lost the support in the shorter term of the top of that flag. So I'm not liking that. PMO is now starting to turn over. which is not good, especially below the zero line. Let's look at Disney real quick here. All right, we got a PMO buy signal just came in on Disney. It came and managed to get above the overhead resistance here at right about here. We got that breakout last Friday, but we're falling right back down again. And I would have looked for support at that top we had back here earlier last week, or it looks like at the beginning of last week on Monday. That support really needs to hold. If that doesn't hold, then I would start looking all the way down here to the 130, 131 area. The upside target Imperial Capital gave it is 147. So it's not that they're not looking for it to move higher. They moved it to a neutral position. They more than likely pulled back that target from, well, I'm certain higher than that. So they've moved the target down to 147. They're still looking for that breakout. I'm not so sure. I mean, we do have that PMO buy signal, but it failed at that overhead resistance. I'd be watching very closely to see if it can hold that 138.95 area. And finally, our last one, Union Pacific. This one was downgraded by Bernstein from an outperform to a market perform. So we're looking at another neutral call. The first thing that really pops out at me right now is this 20-50-day EMA negative crossover that's about ready to occur. Now it's occurring well above the 200-day EMA, so that would be a neutral signal, but you certainly don't want to see that. And, it is testing this short-term support here at the lows we saw back here in April and that we saw on May 31st. PMO is top below its signal line. So I have to say I'm on board with Bernstein on this downgrade. I would be looking for it to maybe hold that support, but now that PMO has gone negative, it's hard to get too excited about it. So I would probably just stay away from it at this point. But if you really wanted to be a risk taker, I suppose you could wait to see if it's going to hold that area. But given the downgrade, not so sure. And that's it for the upgrades and downgrades. Coming up next, you're going to find out how Mary Ellen and Tom did with their Monday setups and what I have for this week as well as Tom.
The point of on trend is to keep you on the right side of the trend. Mostly dealing with stocks and ETFs, I'm going to point out bullish setups on stocks and ETFs that are in uptrends. I'm also going to look at some downtrends, but those are designed also to tell you which stocks and ETFs to stay away from. The main point is to stay on the right side of the trend, the uptrend.
Okay, welcome back. You can see on your screen there Monday setups from last week. Mary Ellen and I'll tell you, we both had decent starts to the week, and Mary Ellen's held up better than mine, but mine did take a tumble. And unfortunately, these picks, when we do take them on Monday, we are required to hold them for 1 week, which is a little against my system. But hey, it is what it is. That's what we signed up for. Let's take a look. I'm going to show first Mary Ellen's pick, which was WST. She got in right around that 120 area, 120, maybe it was close to 121. So it was down a little bit for the week, but you can see earlier in the week it did move up and test overhead resistance. I think I would have probably been looking for at least a bit of selling at that level, because that's where the selling kicked in at the end of April. Has pulled back close to where it was when we talked about it last week. I still think the overall pattern here looks pretty good, and I think Mary Ellen would probably agree if she was here. My stock, on the other hand, and this one was not such a good pick. It started off the week pretty strong. I think it was 96 and change, and it got up to 98 and change on Tuesday of last week. But one of the things, and the reason I like this stock, is it had put in this doji right on the 50-day moving average after moving down intraday with heavy volume and then reversing. So I thought short term it was going to bounce off of that level. And I also like this area of the market, the broadline retailers. I was actually saying that earlier in the show that the broadline retailers were starting to show more strength. However, the thing that I don't like about the stock was the failure at the 20-day. It had a breakout back on Tuesday of last week, failed, came back down below, and it's been trending lower. I think I mentioned last week I'd probably use that tail as a closing stop. We gapped below it today, but we've since reversed. I think this is going to be a big day on Ollie's. Unless we get that reversing candle and can close above where we are currently, I'd be really careful with the stock. It could be in a more protracted, longer-term downtrend, something to maybe keep in mind. But it is time again. Erin, we're going to get your picks this week. What do you have for this week for your Monday setups?
All right. Well, I'm going to start off with Builders First Source. I used a variety of my scans to make some picks this week, so I really can't say, oh, I used this scan, because I kind of was filling up my scan dump with just a lot of stocks that I found interesting from a couple of scans. So these were the ones that I looked at as having the most potential. And the first one, like I said, is BLDR, Builders First Source. You have a PMO that is rising. It is losing a little steam right now. And you can see that the rally that we had coming up, we lost a little bit of volume on that. But we're pulling back, and I think that's a good thing, honestly, because we still have a rising PMO. You have a really nice looking scooter here. OBV, I suppose if we went in here and did a declining tops trend line, we'll just double check that. But I would suspect we're just about breaking out on that OBV. So we're getting very close to a breakout to the upside. So I think it's really set up nicely. It's pulled back to the 20-day EMA. So I would be looking for this one to move higher. Of course, I wouldn't have picked it for a Monday setup, I suppose. Gladstone Commercial Corp. Good. This is a good pick. Well, we'll see. GOOD. At this point, I've got a nice little cup. The one reason I didn't pick it for the week is that it might need a little bit of a pullback to the 20-day EMA to form a little bit of maybe a handle or a test of those short-term highs that the price just recently managed to get above. But the PMO looks really healthy. You can see OBV. Look at all the volume that came in on the rally to the upside here. I think that's looks really good. Excuse me. And of course, like I said, OBV, we're getting a higher reading. And the scooter, we're looking at a move into the hot zone pretty soon here. So I thought that Gladstone Commercial looked pretty good. Kemper Corp. And this is from the Full Line Insurance Industry Group, just about have that PMO buy signal. OBV is sort of just sitting up there, but we're looking at consolidation now for a little while on Kemper. So I'm not surprised to see a little bit of there was some back and forth tugging between bulls and bears, and that's what gives you a flatter OBV. But I really do like the PMO on this one. The one reason I didn't make this my pick was because we really haven't quite broken out above the overhead resistance here. But you could see a little bit of a double bottom here in the very short term. And if that were to fulfill, that would put you right about at the top that we had back here in April and the top in May. So I thought that one has some pretty good potential, but maybe not right now. All right, Manhattan Associates. This one, the PMO is starting to turn a little bit here under the signal line. But overall, I really like the price movement, and this actually turned out to be my pick this week. I like the rising bottoms trend line. We had that big breakout. We pulled back to the breakout point right there, and even a breakout. There you go, through that $69 range as well. So a nice little breakout. I'm going to use this area as support at 68. We're holding it. I would be looking for a move back to test that top that we had last week. I think we could get up there to those intraday highs. But look at the scooter. It's been really strong. You can certainly see the OBV is trending higher. So I like that one. And that's my actual pick. Navi. Go in here, Navient. It's been consolidating mostly sideways. I'm looking for a breakout here, which is why I put it on Monday setups. But the PMO is still a little bit flat. So I didn't make it my actual pick. But I think this one has been sitting on that 20-day EMA for quite a while. The PMO managed to start turning back up. It's right in oversold territory. You can see from the last time. So I'm liking Navient. And here we go. Stemline Therapeutics was another one, kind of a double bottom forming here. But overhead resistance is coming fast at $15, which is why I opted not to pick it as my pick. But you can see a nice PMO bottom here just above the zero line. Got a scooter in the hot zone. OBV, but you can see some pretty decent volume that came in on Thursday and Friday, and it's already a pretty decent volume day on this nice move to the upside. 4% move, and so I would expect it to pull back after that sort of a move anyway, and now we're getting to that overhead resistance. I think this one looks good for more of an intermediate term. And here is Hostess Brands. And again, nice rising PMO. It's actually sitting on some support right now. It was one that I considered, but overall, it just hasn't been much of a mover. So I wasn't expecting it to make any nice, big short-term moves at this point. But I still thought that it looked interesting. So those are my Monday setups, with my pick being, let's go back up here, Manhattan Associates. And it is currently at 68.46.
All right, sounds good. I actually like that stock in that software space as well. So it's definitely been a leader, and I like going with those leaders. So I think MANH looks pretty good.
Hey, to you too. That's good.
Yeah, so I'm going to go with Great Lakes Dredge and Dock Corp. Let me get an update. Make sure I have the last price, $10.49. So this is the one that I mentioned in my blog article this morning. I love the volume trends. You can see the huge move at the end of February, big volume, big move up in early May, heavy volume. The last chance or try at a breakout, you can see the volume was there again. But that was a shooting star candle, false breakout that normally results in short-term weakness. And so I think the short-term weakness is providing an opportunity. I did annotate it already in my blog this morning, so I wanted to go ahead and show this. This is an area that I would really watch. If it does continue to pull back over the next couple of days, I think if it gets down into that upper nines, low tens, I think the reward to risk will really start to strengthen in that area. Of course, it doesn't have to go down that far, so I'm going to go ahead and go with it at its current price, but that is at $10.49, with an idea of it maybe getting back up close to that $11.50 area to test the early June high. So GLDD will be my pick for today. And as far as some of the other selections go, I'm going to start off with AMD. And I'm going to say, let's see if it reverses today, because it's had a bad week. But remember, it had the breakout on big volume, got through 29 and change, finally got through 30, ran all the way up to this 33, 34 area where it struggled in September of last year, printed that shooting star candle, and then is reversing back down. But I would look for a reversing candlestick. Right now, AMD, it's below the 20, but I think if it were to reverse today and get back up above the 20 into the close, I think that would be a good sign for AMD. So I would be watching this one closely. TGI, I may have used this one last week or the week before. Again, watching to see if we get a reversal. So right now, I don't like these failures at the 20-day. But off of the big move up, you can see a lot of positive volume on this stock. This low right here at about 1875 or so is what I'd be watching. A reversal later today before the close and close back up above, say, 19, I think could be printing a bottom on TGI. So I would watch that. GoGo is another one that's been weak of late, this huge steady decline, but it is in the telecom equipment group, which has been pretty strong. And as this has moved back, notice that we had gapped up from about the 420 area to $5. Never went back and filled that gap until just recently. We're down pretty close to that gap support. Notice when we gapped up the volume that came in, most of this selling to the downside has been much lesser volume. I would suspect we're going to turn somewhere around this 420 area. So I think GoGo is one to maybe consider, although watch that declining 20-day moving average. We may not be able to get back through it. That could be a short-term target. Ionis Pharmaceutical, same kind of a deal here. Big move up, heavy volume. We had broken out above 60. This big, almost Maribozu type candle in late February started from 62.5. So I think 60 to 62.5 is a good support area. What you want to see, though, is a break back up above that 20-day moving average. TGNA, this is Tegna Inc. I like this reversal taking place here. And if you notice, we had the gap down in March from about 1435. And then when we went back through, we came back down. It looks like we're holding that level, possibly putting in a reversal. So I think this is in a trading range from the current low today up to the 16.5 area. But even from the current price, 16.5 would probably be about a 12 or 13% move. So I like the reward to risk on this one. And then the last one I have is Zillow Group, ZG. I think it's just in a nice uptrend. This is one I've been watching. I like the volume. I like the fact that the relative strength has started picking up. We just moved relative to its peers to about an 8-month relative high. It's broken out versus the S&P 500. The group itself hasn't been very bad either. It's off of the lows we saw back in late March, trying to move higher. So decent group, really good stock within the group. It's in a nice pattern. I think it's just consolidating sideways here above that 20-day. I really like it on a 20-day test if we get one. So those are our Monday setups for this week. Erin going with a software stock. Usually that's me going with a software stock. But
I know.
you've got the software stock. I'll go with GLDD. Both of these, by the way, are in the poll for today. So if you want to fill out that poll, there are 6 stocks on there. You can choose which one you like the best as a possible setup for the next week. And then we'll go over that at the end of the show. All right, let's move on to Earnings Spotlight. This Earnings Spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of experienced trading service. Earningsbeats.com, better timing, better trades. And Mr. Hopkins, I know you had some pretty good weekend weather because you're not too far from me. How was your weekend?
That was awesome. I mean, really no rain, in the 80s, sunny, Father's Day. Just couldn't beat it, Tom.
Did you play any golf?
I watched golf.
Yeah, that was probably a little better than your golf, I'm assuming.
Just watching fantasizing, something I'll never be capable of. But no, I just kind of, chilled out, had a nice dinner with the family. And like I said, you just couldn't be better.
Yeah, always fun to get together with family. I mentioned that earlier in the show. I had my kids in town as well, so it was good getting together and having a meal together and enjoying the day, watching some little golf, and pretty nice day. Although it got a little bit more humid yesterday. It was still a little warm. I did make it out on the golf course, and it wasn't pretty. It was nothing like what you were watching on TV. I promise.
A lot of people don't know this. I just learned this recently that Father's Day didn't start till like 1972.
Really?
Yeah.
I had no idea.
Surprised me. I was looking at a quiz and they had the dates, laid in there, and I said 1972. There's no way, but that's when it did kick in. That works for me because I didn't become a father till after that. So it was all, for me, it worked out just great. But all the fathers before 72, too bad.
You missed out on a lot of gifts.
It's just the way it was.
Well,
hey, speaking of. What's that?
I like the fact that you're bringing some of this, some of this information to our show, because that could have been our poll question. What year did Father's Day start? That would have been a great one. But
I think most people would have got it wrong.
I would have definitely gotten it wrong. I would have assumed for sure it was back before 1972. But anyway,
absolutely. But now you know.
Yeah.
Right. So I'm adding value to the show already.
Yeah, there you go. What do you got for today?
Well, listen, this was a weekend. I wrote an article in ChartWatchers. Every 2 weeks, I write something. And something really caught my attention. And I want to spend a few minutes talking about it today. And the headline was, "I've never seen an earnings signal this bullish," which, gets a lot of people wondering exactly what's he talking about. But let me set the stage. At Earnings Beats, what we do is we look for companies that have to do 3 things in order to get to our strong earnings chart list. Number 1, they have to be quarterly revenue estimates. Number 2, they got to be quarterly EPS estimates, and they have to look solid technically. And like I said in the article, if the company doesn't meet those requirements, we just ignore them. Because, we have to really, come up with what we think are the best of the best. And what I found was of the 273 stocks that are in the strong earnings chart list, 217 of them are in the total aggressive sector stock sector, and the defensive sector 51. So right off the bat, you've got a 4-to-1 aggressive to defensive stock ratio there, which really, if you stop and think about it, it's a signal that Wall Street's believing the market's going to move higher.
Yeah, I've always followed the well, can't say always, but certainly the last 5 or 6 years, I've followed these strong earnings companies. And, when I was with you at Earnings Beats years ago, helped to form the whole Earnings Beats concept, which is to trade only the companies that are coming through with great earnings. Because, for me, I think it's important because it speaks volumes about the management team. If you're able to go out there and set certain levels that you plan to reach in terms of revenues and earnings, and then you come through and you beat, not just match, but if you beat both of those, I think there's something to be said for that. That's one of the things I think when you look back at Apple over all these many years, they rarely miss their earnings. It is, it's almost like, snow in Florida. It just doesn't happen very often.
You're right.
And so I think that's really important. So I agree. I think when you've got a majority, or certainly a heavy majority of your stocks in this list that are aggressive, part of technology, industrials, those types of sectors, I think that is a signal that the market is anticipating good things as we look forward.
Yeah. And even now, the market's consolidating, which is fine. But I think ultimately, as we get closer to earnings season, we might be surprised by what we see. But anyways, I had a couple of charts in there. One was the XLY versus the XLP, which also showed about a 4-to-1 ratio, which basically showing how the consumer discretionary stocks, aggressive, been performing versus consumer staple stocks. And you can see right there what it looks like.
Yeah, I think the 4-to-1, I think if you look back here, there's your consumer discretionary 45 and consumer staples 12. So that's almost 4-to-1. So I agree. I think, again, kind of supports that overall aggressive versus defensive grouping just by, narrowing it down to the consumer stocks. And that is a nice uptrend. This is actually one of the ratios that I follow very, very closely. I was inspired a lot by John Murphy's work, a lot of the relative charts that he does, comparing one area of the market to another to really give you a better feel for what's taking place in the market. And I think this chart tells us a lot. The fact that not only is this moving higher, but it was moving substantially higher in 2017, 2018. And I think right now just consolidating, I don't think there's anything wrong with that. I expect that this is another one of those signs that suggests we'll go higher.
And then another chart on there, which is software industry, which is represented on our chart list by 42 companies, which again is almost as many stocks as the entire defensive sector, which total 51. And look at the relative chart of software versus the S&P.
Yeah,
it's monster.
This has been a straight up move. And Erin went with one of the software stocks in the Monday setups earlier. So I'm assuming Erin would like to see this line continue moving higher, at least for one more week. Trade Erin.
I'm sure.
Let's
keep
hope.
that thing going. You stay with the winner until it turns on you.
Well, yeah, I definitely agree with that philosophy. If you're a momentum trader, that's what you do.
Yeah.
You're going with the momentum until the momentum turns against you. And if you look back here, the big move up obviously has been the last 2.5 years in relative strength. But even before that, software has been a regular leader in the S&P, among S&P 500 stocks. And as a result, you want to make sure you have representation in there. And Erin did it much better than I did it this week.
Okay.
Well, thank you.
The bottom line here, Tom, is that, I sort of, to put a point on it here, is that you can see Wall Street's committing to aggressive stocks. And the reason they're doing it is they believe earnings are will accelerate later in the year. And they want to own those stocks. So that's, I think, what traders should be thinking about as well.
Yeah, no doubt about it. I think that, first of all, software is definitely an area that I've been investing pretty heavily. And it's mostly because of this ratio. Consumer discretionary is another one, and it's mostly because of this ratio. And as you said earlier, this is a lot of companies in these two aggressive areas that have beaten top line, beaten bottom line estimates, and have pretty nice looking charts to boot. And those are the ones when money rotates and the market does, if it does move higher, I suspect we're going to continue to see leadership there.
A couple of individual stocks here we're talking about. Two that report earnings this week, which is really interesting. These are heavyweights. And, earnings season's, very slow right now.
Yeah.
But there will be two stocks that report this week. Adobe's reporting. Take a look at ADBE.
Okay.
This one is just hugging that 50 and 20. You can see where the 20 came down to the 50. And now it's just, they're pretty much in tandem here. So this report is going to be really interesting. This stock is either going to surprise and take off, or it's going to, I think, get hammered. I don't think there's anything in the middle.
Yeah, I think that I'd be watching the range here to see which one gives way first, but certainly down in the upper 250s up to 291, 292 seems like we've established a battleground. The side at the 258, 257 area, and to the upside that 291. One thing that looks interesting, and now that you mentioned this, is Adobe relative to the software group. So relative to its peers, of course, the group's been great. And so as a result, Adobe's done pretty well relative to the S&P, but relative to its peers, which have done, really well, Adobe actually has been dropping quite a bit. I'm going to stretch this out because I'm interested, because I think Adobe was a leader for a while. I'm going to go back 5 years and switch this to a weekly chart. But see what relative strength was very strong on Adobe. And it's just been the last year that it's been struggling. So you wonder maybe if this report, I agree with you. I think this report is going to send this stock in one direction or the other.
Yeah.
Either it's going to accelerate its underperformance, or it's going to resume that prior outperformance. So if this gets a break back up above that relative high, say in February, I think that would be a bullish development for Adobe.
I agree. And then another one is Oracle, which, it's really interesting. You take a look at the stock. You go back just towards the end of April, and it was looking pretty good. Now, it's pulled back like the market did, and now it's really struggling to advance here. So this is another one that's worth watching.
Yeah, I think when you look at the absolute chart, this is why I love looking at relative charts, because you could look at this and be influenced by it and say Oracle's been a really good performer. I mean, it was as low as 32 back in 2016. Now it's at 53 and change. It's been a nice uptrend. Everything looks good. But when you compare it to its software peers, unlike Adobe, which had been in an uptrend at least until last year or so, this Oracle has been downtrending relative to software stocks for the past 5 years and is at a 5-year relative low right now. I mean, if I had to pick between these two stocks, if I was going to take a chance, and this is just more of an educated guess than anything, but if I had to own one of these two stocks into their earnings report tonight, well, I guess Oracle's tomorrow night, I think, or no, Oracle's Wednesday and
correct
tomorrow night. But if I had to own one of these heading into earnings, I think for me it would be Adobe. I do not like this relative weakness, and it's been extended for a long time, has shown almost no relative strength. And if you think about it, if Wall Street is going out and visiting with Oracle management and they're coming back and they're not buying and they're not getting their clients to buy, and you're seeing this kind of relative weakness, you've got to wonder what might come out in that earnings report. So Oracle, I'm not interested in at all. Adobe, I think that one still has a chance to report pretty nicely. And so what all that means probably, John, is that Oracle will have a blowout report and you're going to want to get out of Adobe.
Exactly. Let me end with this one.
What's that?
SAIC.
Oh, okay.
Yeah. This is really interesting because you can see that SAIC, cleared that. If you went back to September of last year, it got as high as 86.42, and it cleared that level. Look at that volume coming into the stock here. I'm not buying it here. Just, you want to see confirmation, the breakout, or let it pull back. But I think if you're patient here, instead of chasing this thing, I think that it'll be a stock once it settles down that you might want to consider.
Yeah, I agree. I like it in the low 80s. If it were to pull back 81, 82, I mean, you
exactly.
20-day moving average. This was a pretty important level. It broke above from the gap up in late March. So that's about 80 and a half. So yeah, I would say low 80s certainly would make sense. And this is a stock, by the way, relative to its peers, has been on fire for the last 6-7 weeks. And you can see it has moved up to about a 9-10 month relative high versus its peers. So a lot of folks on Wall Street moving into this stock. So on a pullback, especially on light volume, I think this would represent a pretty nice trade.
Yeah. And, just going back to the article for a second, I did mention to folks who read that we have a free newsletter called the Earnings Beats Digest.
Mm-hmm.
And we like to feature our articles highlighting earnings and relative strength. So the combination of the two, I think, is awesome. Like strong earnings and relative strength are the companies you want to be involved in.
Mm-hmm.
And anybody who wants to, love to have you join us. And this comes out Monday, Wednesday, Friday. Feel free to join in.
All right. And I was just looking at this. So you were saying that are you sending out the charts for the 273 stocks?
Yeah, if somebody signs up, they will get access to the 273 strong earning charts that we have right now.
All right.
It's just a link they can click on. They'll see all 273. It's pretty awesome.
Okay.
But then they'll also get the daily, the Monday, Wednesday, Friday Earnings Beat Digest. That's very educational. It's free.
Okay. Very cool. That's a
awesome.
Very generous offer. Thanks, John.
Yep.
All right. We will see you back in a couple of weeks.
Okay. Thanks so much. Take care.
All right. There he goes. And there you can see on your screen the symbols that we just covered during Earnings Spotlight. Always fun to have John on here. I know things really slowed down, Erin, in terms of earnings reports, but we do, can't lose sight of some big ones when they come up, like Adobe and Oracle. They'll be coming up next 2 days, and they will help to direct the market. Although, like we were talking about, you think about those two companies as being leaders, but they're not relative leaders, that's for sure. Or at least they haven't been.
No, they have not.
Nope. So we'll see what happens.
Okay.
All right, ready for 10 and 10?
I was going to say, I have an RRG.
Awesome.
We had quite a few requests today. It's been pretty light last week. Healthcare, though, look at that. Healthcare is definitely where people want to look. We normally have so many technology stocks, and industrials are even beating out technology. So that's pretty interesting. But keep voting out there. We'll see which one is most popular, but we'll start off with Micron.
All right. Micron. Let me pull that chart up. All right. All right, it kind of had the longer term chart here because I wanted to see this low. I mean, I don't really like it at this point because it's below the moving averages, but as it threatens to move lower, you can see the PPO turning higher. So starting to show maybe some signs of slowing momentum to the downside. And when you look back at the history, this selling event in May was really not huge volume compared to what we've seen in the past. So I'm a proponent of the market going higher later this year. And I think the semiconductors are going to participate. So based on that, I'm going to be a fan of most of these stocks. But I'd want to see a couple of things here, I think, on Micron. I think I'd either want to see tests of key support, maybe with a reversal. I think it's pretty obvious those are a couple of key levels. You can look back to the December low, which was around $29, multiple lows back in 2017, around $27. We're currently at 32. I think if the market continues to waffle back and forth and we get some scares from the whole U.S.-China trade thing, then I think Micron could continue to stumble a little bit here as long as it remains below that declining 20-day moving average. So I've got mixed signals. I'm not ready to rush in. I think that Micron, if it starts to get looking better technically, there will be plenty of opportunities down the road. So I'm not going to rush into this stock, but it is beginning at least to show signs of slowing momentum. So that's certainly one positive for the stock as we move throughout the early parts of summer here.
All right, let's see. The most popular in the chat room is Kratos, KTOS.
Yeah, this is an aggressive defensive stock. It's actually in my aggressive portfolio that I announced, I don't know, back May 19th. So it's been almost a month ago. The stock has just been on fire. I really like the defense stocks. I'm going to pull this up on a relative chart so you can get a sense of what I'm referring to here. But defense stocks had a huge move off that April low, pulled back. I'm hoping that low that we saw last week, the relative low, will hold on the defense stocks. If it does and we start to turn back up again, then you've got one of the leaders in the group. So Kratos, relative to the defense group, has broke out a little over a month ago to a new 52-week relative high. Look at the volume coming in. I think there's accumulation of the stock. So I would just be watching first off the 20-day moving average to see if, in fact, we can hold that. We tried to hold it there. We're trying to hold it here. I think that this is a good area to at least be, to start a position if you're interested. I would just say this: you need to be an aggressive trader or investor to look into a stock like this. It's a small cap. You know how quickly these stocks can move in both directions. But I think this area right around $21 is a pretty good initial area of support on KTOS.
All right, let's see the next one up. It was also quite popular request was Fluidigm, FLDM.
Yeah, this was a portfolio stock a couple of months ago, or maybe back. It was February 19th. So I did February 19th, and I did May 19th. And so Fluidigm was one back in here, and you can see the huge move. Very similar type volume characteristics, heavy volume on these moves to the upside, which I just think reeks of accumulation. You can see the medical equipment group breaking out. This stock has continued to be a pretty good relative performer. So within its peer group. So I would be looking at a couple of things here. Number one, let's make sure it holds on to this relative support area versus the S&P. I think also versus its peer group. So if that continues to hold, then I like the stock. It made a huge run. It was a $6, $7 stock, got up to 14.5. And so I think you just have to have a little patience here. I see the stock consolidating off of an uptrend. So eventually, I think the next move is going to be to the upside. But we could see some additional consolidation that could be frustrating in the, for the time being.
Okay, the next one up is ARQL. And the person wants to know, I mean, it's a big day today, if they should take the profit and run, or would you hold longer? Personally, I know I would sell at least half my position.
Yeah, it's a personal choice. I mean, it's a biotech. The one thing I like is that these biotechs, when they start to outperform, I think you need to take, you want to take notice, because normally they're outperforming for a reason. Now, I don't know, maybe they came out with an announcement on Friday of last week on a drug, trial, something. That's my guess. I don't know. I don't know what the news is here, but we did get a big breakout. And I think when you look back and you see these prior highs that were taken out on that kind of volume on Friday, and now we're following up with another high volume day, I would do something to try to be disciplined. I think selling half, like Erin suggested, is one thing you could do, or maybe selling a quarter or a third just to capture something. The other thing would be, you don't know how long this stock might go up day after day, putting in higher lows. So another possibility is to simply just keep raising your stop every day. And the first day it goes lower than the prior day's low, it automatically takes you out of your position, or at least a portion of it. So those are a couple things to think about. But I do love this move to the upside. And there was one other stock I wanted to give you an example of, another biotech, and I had talked about it here on the show, that showed great relative strength in the biotechs, and they just announced they were being bought out, and that was Array Biopharma. Look at this stock today, up 57%. They came out with the announcement. Look at the relative strength that was building even before this announcement came out today. So, these stocks, when you do see accumulation, it does mean something. It doesn't, it's just not a flip of the coin. I think it is telling you that there is interest in the stock for some reason. And it wouldn't surprise me if maybe some of this news had leaked that the stock was, perhaps going to be acquired. But I think that relative strength plays a big role. And I think in these two stocks, I think it's a good illustration.
Absolutely. A trailing stop, that's another good idea. I do like that as well. For when, like I said, if I get in on a parabolic or something's going crazy, I'll set that trailing stop because it could still keep going crazy, but at least I'm covered in case the bottom falls out.
Correct.
All right, next one up is Atmos Energy, ATO. It's a gas distribution company.
Yeah, I think this one's holding up pretty good. And this one is in the utility space. So even though it's got energy in the name, it is a utility. So that's why it's performing so well. So don't think that it's a huge outperformer within energy, because it's not. But it is a really nice looking stock. If you're looking for safety, you're looking for a utility, this is the type of stock I would look for. It's been a pretty good performer relative to the S&P, or the group relative to the S&P has been pretty good. This stock has been a great performer on all these relative charts. I would simply say that the last pullback held that rising 20-day moving average. And so in the very near term, I think you've got a nice uptrending stock. I would look for that 20-day to continue to hold.
All right. And as I always say, when we get a .to stock, OSB.to for our friends in Canada.
Yeah, OSB.
Interesting.
Starting to show some nice strength, and that 20-day is moving up. It's made a big move and it's been in a downtrend. So I think anytime that you get a stock like this, I'm just going to put it on a regular chart, but anytime you get a stock like this, it's been downtrending for a while. If it starts to roll back over again, I get very nervous because I just look at this maybe as a possible head fake. So I think you've got to kind of pick your poison as to where you want to keep a stop. I think a couple of levels kind of strike me right there. Heavy volume gap up to $30, kept moving up. No reason to go back and close below that level. Certainly no reason to go below the bottom of gap support, which is just below 29, and also would be below the 20-day moving average. So I would simply recognize that you're in an area of the market maybe that's not the best, and you got a stock that's not performing well, at least not until these last couple of days. So I would want to make sure I keep my stop in play in the event that it turns against me. But I do like the gap up, getting through the 50-day. Let's see if it can hold.
All right. The next one up is Walgreens Boots, WBA. I don't like it. My PMO it's very strange. The PMO has been trying to rise, yet the price has been sideways and falling. So, it should be a positive divergence, but I don't like the activity.
No, I don't like this one at all. And again, it really comes down to the relative strength. This is the group on an absolute basis going down. The market's been good in 2019, but the drug retail space has just been horrible. And in that space, you can see that Walgreens has been one of the worst performers. So you got a horrible group, a horrible stock within the group. And I'm not saying long term. I'm not saying it's not a good company or you can't go in and, frequent the locations. I'm just saying that on a chart, this stock is being thrown out, and it's being thrown out on very heavy volume. So I think there's a lot of distribution. The stock's fallen a lot. If you like to catch the proverbial fallen knife, or you're a value investor, this might make sense. But as a momentum trader, it makes no sense. So I'm going to pass on it and wait until it begins to show some relative strength, and wait till its group begins to show some relative strength.
All right, next one up is a Schlumberger.
Yeah, I can probably tell you what I think without looking at the chart here. Not going to be a fan. Again, value play, maybe. Dividend play, probably has a pretty nice dividend. But other than that, relative to its peers, it's not doing bad. So if its peers would ever get going, maybe the stock would be okay. You can see the group broke down below the low that it established in December, but SLB, Schlumberger, did not. So on a relative basis, that's why we're seeing a little bit of relative strength here. I just think that you are in almost an upside down cup and handle, really. So instead of going up and have a rounded bottom, you go down and have a rounded top. Come back down, and now you're in this little handle. If you break below 33.5 or so, and volume picks up, I would certainly be out of the stock. I'm not a fan at this point.
All right, the next one up is a Winnebago, WGO. I happened to look at this one on the seasonality just because I was curious, and June seems to be a really good month for it.
Oh, that's interesting to know, especially when you know the stock is outperforming its peers. The peers are not doing very well versus the S&P. So it's really just the group that's holding the stock back. But I actually like the stock. I mean, I don't have a problem if the group, this is a situation when I have that strong earnings chart list, by the way, if you're just tuning in, John Hopkins did offer that to everybody to take a look at. But if I have the strong earnings chart list and I see that this group is beginning to make headway on a relative basis, a lot of times I'll go in and pull up the summary of that chart list, type in the search box, recreational products, and look for the stocks that are on there. So if Winnebago happened to be on there and I liked the group, I typed it in, that could lead me right to the stock to trade. But you can see here, this is a pretty nice area. We're breaking out. I'd like to see a little bit more volume. Be careful of a false breakout. So there's some positives, negatives here, but no denying that this is one of the best stocks in the industry group. So that's noteworthy.
All right, let's see. The last one I have for you is Bristol Myers, BMY. PMO just went positive. I actually kind of like this one.
I think they're, personally for me, I think they're better stocks within this group. So when you look at, for instance, right here, Bristol Myers relative to the pharmas, it is starting to show some relative strength, and maybe at a 2-month high, 3-month high. So it's starting to show a little bit of positive. I would like to see it, if I'm not quite sure, then I go to the price chart and you can see that was the high. I need to at least see volume come in on a breakout. And then if I did trade it, I'd have a tight stop because it's been a relative underperformer. So I don't want to get carried away and hold a stock and try to be a hero when this thing gets away from me to the downside, and especially being in a lagging area of the market. You can see also in terms of relative strength, pharmas versus the S&P moving lower. So I think there's enough right now to keep me out of this stock. I'd want to see volume. You can see no volume at this point coming in on this move. So I'd want to see some volume coming in on the breakout. And if you got that, I think, yeah, there's a decent chance maybe we could run up to about that 53, 54 area.
All right, that does conclude the 10 and 10. Here are the symbols that Tom just annotated. They will be up in the MarketWatchers Live chart list. Just go to the Articles tab, click on MarketWatchers Live blog, and the link is right there at the top of that blog. All right, we'll be back with our final market update, and I'll be telling you about how the market feels in the sentiment report.
The ChartWatchers newsletter features expert technical commentary about the current market from some of the industry's leading technical analysts. See what's really happening in the markets through their eyes and gain an edge in your own investing. The newsletter is packed full of insightful and educational articles intended to help you become a better investor. Whether you are brand new to charting or a seasoned technical analyst, each edition will provide a wealth of informative content. It's the best way to stay informed on all the latest news, events, updates, and additions here at StockCharts.com. Whether it's a new feature or blog, an upcoming conference, or a special sale, you'll hear it first in the ChartWatchers newsletter.
All right, here is our final market update. Markets are on the positive side right now. Dow Jones is up 0.21%, 54 points, just above. The S&P 500 just under 7 points higher. That would give us a 0.23% gain. NASDAQ looking pretty good, forming a flag, could see a breakout from that intraday high, currently up 0.79%. NYSE overall is just up a hair, almost 0.1%. And Russell 2000 certainly having a great day. It is really one of the best performers on our market summary, up 0.91%. But notice it hasn't quite gotten above the tops that we saw late Thursday and early Friday. So I'd like to see that broken a little bit more decisively than what we're seeing right now. Canadian markets are up, looking to continue that streak that started on Friday. TNX Treasury yields are down somewhat. We're looking at 2.086%. VIX is slightly higher, reading at about 15.5. UUP is nearly unchanged, down 1 cent, $26.30. GLD is down 9 cents. 126.47. USO is down almost 0.5% today, but still staying in sort of that trading zone that started on a Thursday. TLT higher, forming a little intraday flag here. We'll see if we can get a breakout a little bit higher than the highs that we saw on Friday. Currently up 17 cents, 131.63. And as far as our sector scoreboards go here, communication services is certainly the winner, up over 1% currently. Materials down 0.75%. All right, Tom, I'm going to give you hand you the baton while I prepare for sentiment.
All right, that sounds good. I wanted to just take a quick look. There's a group that's having a pretty good day today, the autos. And when you look at it, just looking at today's action, you might think, oh, this is a group I want to be part of. But I do want to just mention, this is a 5-year chart of the automobile group, a daily chart. And you can see last 5 years really not doing a whole lot, actually been in a downtrend for the past 18 months. Down here on the bottom is the autos relative to the S&P 500. And you can see just a steady decline to the downside. So while sometimes it might seem like it's tempting to jump into these autos when they get hot, they start moving to the upside, history tells us you really want to be careful, because on a relative basis, they do continue to underperform and have been an underperformer for quite a while. And so if you have an individual stock and it starts to break down, you want to make sure you keep those stops in play when you're in a group like this that has been a relative laggard for quite a while. All right, we are going to move now into our final segment of the day, which is sentiment. And it's interesting, with the market going sideways here for the last week, Erin, what's sentiment telling us?
All right, well, it is mixed. That's just pretty much how it runs. But here we go. Decision Point Sentiment Update for June 17th, 2019. Today, we're going to look at the same old sentiment symbols that we usually look at, but I just wanted to give you a name of some of these acronyms. The American Association of Individual Investors, they have a poll that we will be looking at. This one is one of my favorites, the National Association of Active Investment Managers, or NAME. This tells us how exposed the big guys are, the active investment managers, to the market. So we look at that exposure. RIDEX ratio, which is a decision point exclusive to StockCharts. Wall Street Sentiment Survey, we'll take a peek at what market timers are thinking. We've already been looking at the VIX, but we'll look at that a little bit more closely. And then I do have gold sentiment to report to you as well. But let's go ahead and get started on what we've got for you. I'm going to use the inverted scales for my oversold, overbought analysis. You'll see this on a couple of my charts, but I always want to point that out for you. And what we can see right now when you're looking at the put-call ratio, these are the 10-day moving averages. We've got the lows that we got last week, and we're now starting to see those ratios rising or getting smaller. And that is bullish for the market. You could see typically when we get a bottom on these ratios, that usually is right before a move to the upside. This one was a little bit of a fake out, almost like a double bottom here, right? And now we're starting to head back up. I would say we could still be looking at higher prices here based on these put-call ratios. This is usually a hedge, the OAX put-call ratio, and we're seeing those numbers moving much higher. This just tells me that people are starting to get a little bit more off of the fence, but what we want to see is these readings not get too overbought, because once they get overbought, then we start looking at tops, and that usually precedes a price top. So right now we're looking pretty good with the rising put-call ratios. Here is our AAII poll. And, I was looking at these charts, and I as far as the polls, and I was really struggling to find something interesting here to talk about, because really what you can see are bulls are just a little bit less here than bears. But what I want you to remember are these numbers, because when we go see the Wall Street Sentiment Survey, I think you'll see a little bit of a difference between the two. Right now, the ratio is below 1, which means that the participants in this poll are leaning more bearish in their opinions. But it is kind of tempered with a pretty decent amount of bulls when you put the two together, which is why our ratio is only slightly under the 1 area. You can see I've put that horizontal line just so you can see whether this is really a climactic reading or not. It's certainly on the low side, but I wouldn't go so far as to say that it's climactically low. It, in fact, is rising, and that tells you that we're starting to see more bulls than we did before. That's why that ratio starts to get a bit higher. So, people are starting to feel a little bit more bullish despite these readings. I would say if they're starting to feel a bit more bullish as we get this ratio rising, then overall, that's not good for the market. That's a bearish sentiment reading. So that's bearish for the market, because if people are getting more bullish, sentiment is contrarian. All right, the name exposure index. What are the active money managers doing? First of all, I wanted to note, I put that horizontal line on that reading. So even though we saw a really big move to the upside here, a pretty big increase in exposure for the active investment managers, the issue is it's not really that climactic as far as a reading. Again, similar situation with the AAII, that the ratio wasn't really that climactic, although we saw an increase in the bulls. So right now we still have, it's sort of a mediocre exposure reading, but the fact that it did increase to the degree it did, I would read that as somewhat bearish for the market. When you see these troughs here, these really low exposure readings, typically that precedes a rally, typically. Obviously, if it were foolproof, that would be great. But notice you can see these very extreme exposure readings, and they nearly always precede a price rise. So we're not we're in that neutral zone as far as these readings are concerned. But they did rise quite a bit, meaning that the investment managers are starting to feel more bullish, and that typically is bearish for the market. So overall, investment managers increasing their exposure to that degree, I would look at that as a little bit bearish for the market going in. All right, Wall Street Sentiment Survey. This is the one I wanted you to remember. We had that increase in bulls, but the increase still only put it at 26%. Notice market timers are a lot more bullish. Half of us came in on that sentiment survey on Friday, 50% on the bullish side of things. Still quite a few bears. Not that many people who are on the fence right now, only 12% neutral at this point. The reading, though, is right around 1. It's a little bit higher. So that does make, with everybody feeling a little bit more bullish as far as market timers, and that's going to be bearish for the market. This particular survey is only for the week ahead. So the survey asks you in particular, are you a bull, a bear, or neutral going into next week? How do you think the market will close at the end of the week? So these are very short-term readings, which is why you may see that difference with way more bulls going into this week for the market timers, but seeing a lot less bulls on the AAII, the investors that just go to their website and just click on the poll and make their own vote. Market timers are feeling pretty good about the market this week. I came in on a negative. I was a bear for the week. But these readings, like I said, what you want to get are these climactic readings. Climactic being very, very low, and then also very high. So if you have a very high reading, that means everybody's really, really bullish in comparison to how many bears. So everybody's very bullish right now. I mean, you can see there aren't too many readings where we get over half of the timers on the bullish side. But we also got an increase in the bears, which is why that ratio didn't really get into that climactic area above 2. But the fact that we had so many of the timers come in bullish, I would look at the very short term as bearish going into this week, just because even though a lot of us are right a lot of the time, sentiment is contrarian. And so we have to look at it in that way. And an increase in having everybody half bullish, I would think that's a bit bearish for the market going into the week. All right, next one up is the RIDEX ratio. The RIDEX chart, and I always go into some explanation for those who don't watch this, but RIDEX has, Guggenheim has a group of funds that RIDEX used to manage. Basically, it's a basket of bear funds, a basket of bull and sector funds, and then we look at the money market assets. So these assets are reported at the end of the, at night, and we get those put in, so you'll usually see the most recent the next morning when it updates. So what I do is I compare the assets in each of these groups, and that tells me whether the cash flow is moving in or out of the bear funds and the money markets, and whether it's increasing or decreasing in the bull funds. Because if as we see right now, if we're getting people pulling out of the bear funds and pulling out of their money markets, and we're getting an increase in the bull funds, that implies that they're taking their bearish money and making it bullish by putting it into those bull and sector funds. So when you see this sort of a setup, that means that investors are feeling very bullish. Well, bullish sentiment is bearish for the market. So it's telling us to expect some lower prices based on the money flow, what people are actually doing with their money. All right, I'm going to look at our ultra short-term indicators for Decision Point. You can find this chart in the Decision Point live chart list. Just go to the articles tab and click on the Decision Point blog, and the link to my live chart list is there, and you'll find this chart and the scoreboard index is there, as well as our short and intermediate term indicators, just to let you know. All right, so looking at this, I didn't see any climactic readings. On Friday, Carl and I talked about the climactic reading from the previous Thursday, and then what we were seeing on Friday, which wasn't much. So we look for these readings, these spiky readings. You know, back here we had an incredible amount of the new highs just gaining. On the S&P, we set highs, new highs that we hadn't seen in over a year. But I did go back and look at some of those other new high charts on the Decision Point show, not this last program, but the one the Friday before that. And one of the things Carl noted is that even though we have these really, you know, we had the new high moving up to readings we hadn't seen in over a year for the S&P, if you looked at the NYSE and others, you would have found that they weren't making those highs, new highs, to the same degree. So that's what you look for, are these climactic moves, and then the expectation is you go the other way. So we have these very bullish readings, and then we ended up flat after that. You know, VIX isn't telling us much. The bands are pinching together. And then the actual readings from Friday, I wasn't really impressed with. All right, time to finish off here with gold. I think it was this one that I wanted. No, it was this one. There we go. I've been watching this descending wedge. It did execute, and you know, this is Fridays because this is the contract for gold. This is GLD up here, but we don't have the readings because it's going off of the 14th, which was right here. So anyway, we made a nice move to 1360. Didn't quite get to overhead resistance at the top here back from April. PMO's rising. We're noticing a pullback on the discounts. There's more interest in gold. But they still are pretty high, as you can see, for a typical reading. And bearish discounts is bullish for gold. I think gold still looks fantastic. And if you look at a weekly chart, you've got that flag formation. We've now executed it, certainly with a decisive move breakout above that declining tops trend line. Now it's just a matter of getting to the top of this trading range that we've been in since 2016. And really, you could say all the way back to 2013 is when it started. We just had a little bit of a bad spot here back at the end of 2015. But overall, we've been in this trading range and we're getting ready to hit the top of it. The question is whether it's going to be able to break out finally this time. I think that it's set up well. I know a lot of other market timers think it's set up well. I am looking for that breakout. I've got the PMO buy signal on the weekly chart. We're still seeing high enough discounts to me that would support more interest in gold. And that would, of course, push us out of that trading range. That's pretty much it for sentiment. Let me go ahead and I'll show you the results of everything we looked at. Put call ratio, neutral to bullish for the market. AAII, neutral to bearish. Neutral to bearish for name. So we're leaning on the neutral to bearish side. Another neutral to bearish for Wall Street sentiment. And then as far as RightX ratio, full on bearish for the market, I would say. Neutral is, that should be bullish because we saw a lot of money. There you go, decrease. And that is a typo. That should be bullish for the market. Breadth and VIX, nothing is really that climactic. So I may move that neutral, and I just realized that is correct. It is bearish because people are getting more bullish with their money. Gold sentiment pullback on discounts, still elevated, but I would say bullish overall for gold. But if you count up our sentiment summary, I would say neutral to bearish for the market going into this week. All right, that concludes it.
Yeah, I would have to agree with you, Erin. I mean, I haven't talked too much about gold being, I certainly haven't been bullish, but I do think that the setup right now is as bullish for gold if we can get that breakout as it's been for quite some time. And the thing I follow is the dollar, because there is that long-term inverse correlation between the dollar and gold. Not that they can't go in the same direction for a brief period, but longer term they tend to move opposite one another. So if the dollar continues moving lower, then gold should continue moving higher. But anyhow, let's go over our setups here for this week. AMD, probably because it's been such a popular stock, is number one. Mm-hmm. And Manhattan, the software stock, is number 2.
Yay, that's mine. And you're right behind that with your GLDD. So I think it's looking pretty good.
Yeah, I think I like AMD here, especially if we get a reversal today. I want to get it back up above the 20-day because it has had a nice pullback now after that huge move on heavy volume that it saw to the upside a couple weeks ago. So I think pulling back is a good opportunity here on AMD. It's been a leader within the semis. We'll see whether or not it can continue.
Yep, I just wouldn't pick it for the week, but I think you're right.
Yeah, I think the week is going to be tough unless we get a reversal today. I think if we get the reversal today, we could see a bottom, but we'll have to wait and see if that happens. But I do want to, before we go, I'm going to show you this chart that I was referring to. This is the U.S. Treasury yield minus Germany, and you can see up through mid-fourth quarter of 2018, this ratio, U.S. Treasury yields versus Germany, was moving up. The dollar was moving up with it, but the dollar has kept moving up while this has moved down, and that doesn't happen very often. So we've got an inverse correlation taking place, which, in my opinion, is likely to be resolved with the dollar falling. And if that happens, then that should bode well for gold, especially if we get a breakout to boot.
Yep, I'm looking for exactly the same thing, Tom. Can you believe it?
Yeah, we're not on the same page very often.
It's true.
Sometimes it's the time frames. I wouldn't say we're not on the same page, but maybe the time frames.
Yeah, it does change things.
All right, well, there you go. There's your upcoming schedule. A lot of great guests coming up, so you'll want to make sure you check out Market Watchers Live as we go forward. Thanks to all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. See you here tomorrow. Happy trading.